Hey there, folks. Happy Sunday to you. I hope you're having a fantastic weekend. Coming at you live with this week's market wrap video. An awful lot to go over. This is like the third time I'm doing this video. The first two times were extremely long in nature, and I wanted to trim it down a bit, so we're giving it another take. But there is an awful lot to talk about after the action last week. Listen, we did get a small Santa Claus rally towards the end of the year last year, and we didn't get any January effect that we typically get. And when you see headlines out there like "This is the worst New Year open in market history ever," that's a pretty scary headline, right? Ever is a very long time. And, if we look at things and we look at the action that we had in the markets last year, uh, basically we had talked about the fact that we really had gone nowhere through the entire year. And we all know there are four phases of the market. There's the up phase, there's the distribution phase, then there's the down phase, the markdown phase, and then there's, consolidation and accumulation once again, and the cycle repeats itself. So if we're to look at it, we could say that last year was our distribution phase, and we're entering into the down phase, the markdown phase. And typically, I know that everyone is calling out a bear market. What's the definition of a bear market when you have a correction 20% or more? And that we talked about it several weeks ago that we were already in a stealth bear market in a lot of sectors already, and we could be heading into. I guess what I would be more concerned about is what we call it, whether it's a bear market. What we're really concerned about is the duration in which this could last, right? And have we now turned the corner from, buy every dip to sell every rip? And that may be what's happening. But that doesn't mean that we can't get some really nice snapbacks within the market and some great trading opportunities. Okay? Uh, and it also doesn't mean that at some point we won't have some extreme values out there where we could start building our long-term portfolios. So it's a scary time. We're going to go through a lot of scary looking charts. However, not everything is doom and gloom. I don't really feel as though we need to say that this is a defined bear market. And more importantly, I think we need to try and figure out how we want to navigate this market turmoil. So let's take a look at some things. Transportation. So, we talked about transportation, and it was a fly in the ointment for the markets. Let's actually look at the IYT. I like looking at this one a little bit more. We're looking at the weekly chart, and we talked about this last week that it was concerning. We were coming up to this long-term trend line and looked as though we could test it, and we've actually closed below that long-term trend line, which could be the indication that we have now, had a reversal in the long-term trend, and we're starting a new long-term trend, and that could be to the downside. Okay, so that's concerning. Let's take a look at the XRT. That was our other concerning sector, right? That was testing this very clean long-term trend line. We took it out and closed below it, and darn near closed at the low of the day. So another very concerning chart, right? Concerning trend. Let's take a look at consumer discretionary. We have not broken the long-term trend, and I think I need to clearly identify what's going on here. So, a lot of times when we get into an upward trend and stuff, whether it's stocks or indexes or markets or whatever, you start to get an accelerated ramp, which pulls away from the original trend that it started to establish, right? You get a ramp, and we move up on a more accelerated pace. So that's what's happened with this XLY. It had an accelerated ramp, and now you've got an area of support that it could be coming down to the test. If we lose that, we could come all the way back down here and still be able to remain in an uptrend. Now, what typically will happen is if we break below this line, then that becomes a resistance area a wall that we have to try and reclaim and get back through. Matter of fact, let's take a look at healthcare, and this is a pretty clear example of what I was just talking about. So, we had this uptrend that was established through 2009 up to 2012, and then all of a sudden we started to accelerate that ramp, okay? And we create a new trend line that has been serving as support. Eventually that broke down, and now if you look here, it's struggling to get back over it, right? This is now serving as resistance, and we're having a difficult time getting back above there. So we broke this little short-term trend line here, and looking as though we could potentially come down and test, the 200-day, somewhere in that range. But this is showing you that just about every single sector is under pressure. XLU, utilities. I think this is one to highlight, because in times of market turmoil, utilities can perform well because a lot of people view them as a safety area. It is in an uptrend. You have to keep in mind, though, that if the overall market rolls, 90% of the stocks that are in the market are going to follow. So even though the utilities may pay a nice dividend, if the stock falls, 15, 10, 20, 15, 30%, well, is the dividend covering what you're losing in the overall stock price? So just be careful in the utility sector. I'm not saying not to take them. I'm just saying make sure that you know what you're getting into before you go piling in. I mean, if the market really does roll over, it will be probably less affected, but it will still be affected. So be careful in that space. Technology, Apple has been a big drag on technology, and then we actually saw that narrow band of stocks, the Apple, Google, Microsoft, and Amazon. Netflix. We've seen those under pressure, and they're pulling back. And that was the narrow band of strength that was really kind of holding up this whole market, and that's concerning, right? I mean, they could be in the beginning phase of some type of correction. They were overvalued. The thing is that we've been overvalued in those names for quite a while, and then you have a whole nother subset of the markets that have been undervalued or have been getting crushed, and you have to wonder when the value investors start to come in, and can we see a sector rotation? Could we see a rotation out of these high flyers into the value space? And I think that's something that you want to kind of pay attention to. Industrial, same thing. We are approaching the long-term trend line, and it does kind of, all of these charts kind of look like we're rolling over, right? But let's see what happens at these long-term trend lines. Financials, not look, again, here's an acceleration, right? A ramp. And it looks as though we're pulling back, and it looks as though we could come down and test this trend line. And if you think about that, it's kind of interesting, because one of the things that everybody is concerned about is a rising rate environment, which I just think is absolutely ludicrous that the Fed is even considering that with everything that's going on around the globe. But financials typically do well in a rising rate environment, and they are not. So maybe people don't believe that they're going to be raising rates, but financial sector also looks as though it's having a difficult time. Energy, we know this. One thing I want to show you about energy, and I find this to be pretty interesting. Let's back it out and take a look at an even longer term view. So here we've been in an uptrend in energy, long-term uptrend since 2002. And we are testing this trend line right here at this particular point. And, I truly do believe that there's going to be a lot of money to be made in the energy sector. It's going to require you to do more than just look at the technical setup. You need to find the companies with the best balance sheets that can weather this storm. Because one thing that recessions and do is they do weed out the weak companies, but they also make incredibly strong companies, right? So the company that can weather the storm, when it's all said and done, they wind up coming out on top and 10 times stronger than they were at the beginning of the recession. And that's the kind of company you want to be invested in for the long term. I truly believe that energy is going to make people a lot of money. I do not believe that gas is going to go to a nickel a share, and it's just energy are going to stay at these low prices forever. It's just not the way it works, and I do think that sector will come back. And if you can identify the strongest opportunities within that sector, I think you're going to make a lot of money if you can have a longer term time frame. XLB building materials has broken this uptrend. XIV volatility. So when we get to these really volatile areas in the market. So in the chat room, I have Grim, who I am fortunate to have in there. She focuses primarily on trading XIV and UVXY, and she is extremely good at it. So, if you are looking for a place where you can come in and talk about, ETNs, ETFs, Grim is really, really good at what she does, and she is more than happy to answer questions. It's something that you may want it's a really nice narrowed focus as opposed to try and find, sorting through 5,520 names of stocks. Trading the ETFs and ETNs are pretty interesting. I've actually been flirting around with it myself, and it's in this kind of environment. There's plenty of liquidity in the space, so it's not like you're having a difficult time trying to find buyers or sellers. It's definitely something that you might want to check out in these particular times. So home builders have broken this accelerated ramp here, and it looks as though we come down. If we could come down and test this price support here around 29 bucks. If that breaks, we are likely going lower. Let's take a look at we'll go to the IBB. One other thing here. So everyone seems to be placing the money on the fact that the dollar is just going to continue to climb higher, and that's going to continue to put a hurting on the market. It does look as though it is consolidating a little bit, but this trade, everyone seems to be on the same page with this particular trade, that the dollar is just going to scream higher. And I thought the action last week wasn't all that strong. We'll see what happens with the dollar, but you definitely want to keep an eye on it. If it starts to strengthen, it's going to be tough on our multinationals, but that's supposed to also be good for our small caps, which you'll soon see is not looking real strong. USO, we could just take a look at that real quick. It continues to drop. We have not seen a total capitulation, but we are getting near oversold. We are piercing the lower Bollinger Band. We could see a snap fairly soon in the oil sector. And there has been a tremendous amount of insider buying in that space. And I find that, listen, I've said it before, insiders buy for only one reason. They think that the stock price is cheap. The only reason why they're going to pull money out of their pocket with a significant amount. If they're putting up some significant money, they must think that the thing is undervalued and they can make a lot of money there. So that's something else that you should check out when you're doing your due diligence. You want to see a strong balance sheet. You want to see insiders ponying up, right? That to me is a good sign. Let's see what else we got going on here. UPRO. Trying to blast through this as fast as I can. TZA coming up into an interesting spot here. Could be an area of resistance. Look, this entire video is not going to be all gloom and doom. I know there's a lot of negative stuff that we're going through here, but it's not going to end that way. Because why? Well, because I'm an optimist. That's why. Solar sector got destroyed, right? I mean, it had this nice breakout. It gapped up. It's been consolidating, and now it's almost pulled back to where it gapped up. It's closed this gap. It's almost pulled all the way back to where it was, and we could see a bounce in that sector. Let's take a look at the S&P 500. And I think we want to, I know there's a lot of stuff, a lot of lines on this S&P 500 chart, a lot of different levels. I'm just trying to determine, where we could see some support is what I'm looking at. And right now I'm kind of looking at this 1889, somewhere in that area, 1885, somewhere 1880 is kind of what I'm looking at for a potential area of support. I mean, we sliced right through these other areas. Now I'm looking for where else we might be able to pull back to before we find some support. We could pull all the way back to 1800. Okay, that is possible. So I try to identify those areas of support. Social has broken down. Facebook did a face plant last week. It's looking as though we could potentially come down here, test this 1729. We did get some data out of China over the weekend. I think the GDP, that could set the tone for our markets on Monday. We could see, really ideally, what I would like to see, and I mentioned it last week in the blog, is that I would like to see a capitulation flush. I want to see us open. I'd love to see us gap down in the morning, have a capitulation flush on massive volume, and then a nice strong reversal to either close flat or green on the day. That to me would be a great sign and potentially set us up for a nice trading week or two, maybe even a month. It depends on how aggressive it is, but that's the setup that I would like to see. I do not like gap up days like we saw on Friday. So, after 4 days, and then we get a very strong employment number, what happens? We get a strong employment number, the market's looking good pre-market, we're gapping higher, and after the market opened, we just basically, after that gap, we faded for the remainder of the day. I hate gap up days, I don't like trading them, and that isn't the kind of day that we want to see. We don't want to see Monday, we're gapping up 500 points, okay, or 1,000 points. That's not my idea of a good setup. So hopefully we get some kind of a flush next week, and it may not happen on Monday. Maybe it happens on Tuesday. Maybe we get a flush on Monday, and that carries over into Tuesday. We open up red on Tuesday, and then we get a green snapback. That would be ideal. SMH, so this is going to have this. Apple has a lot to do with this, right? So we've seen a lot of reports of Apple iPhone cuts, production cuts. Then you saw some of their suppliers, chip suppliers, cutting their estimates, and that has put a hurting on the SMH. And we've got a ways to go to test the long-term trend line in the SMH. And what we want to see is we want to see this 43 area hold as support. If we take that out, the next area of fairly sizable support would be somewhere in this $36 range. There are other levels, right? 39, 40 bucks would be a level of potential support. $40, I mean, it's a psychological level, round number. Could see some some support there. But if we break this long-term trend line, it could get ugly in the SMH. And oh, silver and gold. Let's talk about silver and gold. You know, safety trade, right? Perceived safety trade. And I know that's people are talking about, you know, you gotta, but I gotta tell you, the action on Friday the action last week actually wasn't all that fantastic in silver and gold for the kind of sell-off that we were seeing. Okay, I think that I mean on Friday we actually were down a little bit, right? GDXJ didn't perform well on Friday. GDX didn't really perform well on Friday. So I think you need to be careful in the, you know, piling into the gold and silver trade as well. I don't think that that is, you know, an easy solution to what's going on in the marketplace. Let's take a look at IWM. You know, 103.8. This actually is pulled back right to where we identified potential support. I did not think we were going to see this hard of a sell-off this quickly. Let's go to the weekly. I mean, we are testing this long-term trend line. Okay? We are on the cusp. It's when we break this trend line that, oh, you know, there's one other thing I want to show you too. It's very important. This 50-100 cross on the weekly is very important to me. You know, we've come down and we've come close to testing. When I will absolutely throw in the towel and say, this is it, we are absolutely in a bear market, recession, correction, whatever you want to call it, is when we get the 50 on the weekly time frame that crosses below the 100. That's when you know that we have a total trend reversal. I mean, look at how long, once you cross to the upside, we are in a beautiful uptrend. It's when we cross to the downside that we could see. Let's see if I can go back to. Well, when we cross to the downside, that's when we can start a prolonged correction in the market. So, and we haven't done that. We haven't done that. If you go back and look at all those charts that I show you, put in E50 and E100 on the weekly. You go back and look, a lot of those spaces that we just talked about, they have not crossed to the downside. So I am not as doomsday-ish as everyone else seems to be, but I will get there if certain things happen, like that 50-100 cross. Let's see what else we got going on. You know, I saw, it was funny, beginning of the year, everybody was saying you got to go in emerging markets. They look just as bad, right? I mean, not looking real healthy in emerging markets either. I know that there are a lot of people touting that that's where the value is, but you know, look, I'll just stick in the States. That's kind of where I'm at. Let's look at the IBB on the weekly. You know, here's that accelerated ramp. I mean, if you look at the trend that it was building, right, that this trend line was serving as support, and then all of a sudden we took off. We just accelerated the ramp on that, and now we are testing that accelerated ramp. We've got a long ways to go before we would actually test the upward trend, the long-term upward trend. But there are some significant levels here of potentially of support right now. 300 psychological level. We break below 300, potentially come down here and test this 278. If that breaks down, 243, 211, you know, we're right back down to a 200, another potential psychologically important number, round number. The other thing, oh, mid caps. I do want to, you know, I know this is a lot of stuff, but I think it's just really super important that we go over this. You know, mid caps, we're doing the same thing. We're coming down and we're testing the long-term trend line and the 200-day. And like we just talked about, we do have the E50 sloping down, and we do have the E100 starting to flatten, and even maybe looks like we took a little turn down after Friday. Concerning. I mean, it is concerning, but it has not crossed. So I am not 100% bearish. But we're coming up to an important area on this long-term trend line. There is no doubt about it that all the signs are there that we are potentially turning the corner into a new long-term trend. I'm not completely sold on it yet. I'll let you know when I get there. One area you need to be careful is this hack. You know, CUDA came out and reported. You guys know I like this space for the long term, and I do. For the long term hold, you know, IRA, where you're not really looking at it every single day, I do like this space. I think it's going to be, you know, critically important in the future, but it's not cheap by any stretch of the imagination. That space, the companies within it, Palo Alto Networks, you know, CUDA came out and lowered guidance, and that's, oops, sorry, and that is what hurt the space. Did not have a good earnings report. That is an ugly chart. I think the next one to report is FTNT, right? Not a good looking chart. The space is under pressure. You need to be careful in this space. And, you know, if you look at this for FTNT, I haven't even looked at this company in a long time. But look where it's at. It's come right down to this area of support. If it loses this, it could get ugly quick in FTNT. FireEye, you know, testing all-time lows. So we have no area of reference for support for this particular stock. You need to be careful in the space. Catching a falling knife is not a wise plan. So just be careful in that sector, okay? And let's see what else we got going on. Did we talk about IBB? IBB, we did talk. We talked about this accelerated ramp. You know, we were looking pretty good, constructive in IBB, and we were testing this short-term trend line. We were consolidating right here. I was hoping for a breakout. That would be good for the overall market, and we just didn't get it. We got a failure. So, you know, things could get ugly in the IBB, and you need to be real careful in that space as well. The flip side of that, though, is, you know, if the IBB just completely craters, this is one that you want to keep an eye on, is this BIS. It's the ultra short in the biotech sector. So one to keep an eye on. NASDAQ, I don't know if we went over it, but several areas of potential support. You know, 4,500 psychological round number. See if that holds as support. If it doesn't, we could potentially come down here and test this 43.25 area. If that breaks loose, then we are coming down to test this long-term trend line. So, listen, lots of scary looking stuff out there, pretty ominous, but I'm not going to end it that way, okay? Remember those two indicators? The T2107, the percentage of stocks above their 200-day moving average. Guess where we're back to? Right? We're real close to being right back to that area of support that just held a couple weeks ago where we had that nice snapback. Right? Remember we said anything below 20 has served. I mean, this is the weekly chart here. Has served. We can even go back on the monthly on this one, if I'm not mistaken. Yeah. So every time we get into this area, we've had some pretty severe snapbacks. Okay, some pretty powerful snapbacks, I should say. And here we are tapping it again. So I'm thinking within the next week that we should have another powerful snapback. Now, what's interesting about that is that we're entering earnings season, okay? So one of the things that, and this is why I'm not sold on the recession thing or the bear market, you know, complete meltdown of the markets. I'm just not sold on it yet because typically that happens with the recession. We just had an incredibly strong earnings or employment report on Friday. So one of the things that you always want to pay attention to for potential recession is employment, right? You start seeing a lot more unemployed people. Well, we just had an incredibly strong employment number. That's one. Number two, um, it's presidential election year, right? I mean, is Obama going to go out? I mean, not to say that they have total control, but is, the market going to go into a full-blown meltdown in his last year as presidency so that he can leave that as his legacy? I don't think so. I mean, I just think that's probably not going to happen. Interest rates are still incredibly low. They can talk about raising them as much as they want, but if the markets continue to show the turmoil and we have this global unrest, I doubt they're going to raise the interest rates. There's just a lot of Fed speak. So, I listed about 4 or 5 or 6 things in my blog on Friday as reasons as to why I was not completely sold on the bear market. I know the definition is 20%, or more down. Look, it's possible that we could tag that. I just think that fear is taking over the market right now. It's emotion based, and we could get a really, really hard snapback. Now, the question is, though, are these opportunities that you want to sell the rips and even potentially start to go short if it gets overdone to the upside? Yeah, I mean, that's absolutely possible. But I don't think this is just going to be a straight line down, okay? It's not going to be like you can just go ahead and start shorting everything and you're going to make a gazillion dollars. It's just not going to work that way. And one of the things that I think you need to pay attention to is the 2107, right? When we get into this area, if we break below into single digits, that is not the time you start piling into your shorts. You're going to get hurt. That's the time you need to start covering your shorts, okay? T2107, T2108, this is the stock percentage of stocks above their 40-day, right back to that area where we find support and potentially bounce this 1344, right? Let's go to the weekly on that, actually. It's a little more clear. When we get into this 1344, look how many times that is held as an area of support. And when we do pierce it, we don't stay down there for very long. So they can be extreme moves. They can be painful if you get into the single digits because there's something going on, some kind of a major fear event that is taking place. And there can be a lot of damage done when these things break down. But this is not the time that you start piling on. You might take some shorts for day trades, but you don't want to be taking shorts to hold overnight, okay, when you get into this area. So anyway, I think I have covered everything that I wanted to cover. I know that these are scary times. If you have a long-term portfolio, and you like the companies that you own, please don't panic now after we've had this, big decrease over this last week. Don't panic now and start selling your stuff, okay? Wait for that snapback, and then if you want to unload, if you're a little too heavy in something, scale out. Take some off the table. If you've got profits that you've been sitting on, stocks that you've been holding for a year or whatever, book a little profit, raise some cash on the next snapback, on this next bounce rally. Don't start selling into the panic. Okay, if we do flush down on Monday, don't start pulling the trigger and selling your stuff into a parabolic flush, okay? Because likely we're going to have a really hard snap back in the next week or so. So just be patient, don't panic, and that's it. I'm going to go ahead and shut this one down. If I can think of anything else that I might have missed in this video, I will be back. I'm coming back with stocks to watch for next week. And that's it, folks. I will see you in a few minutes.